Hello and welcome everyone to Almus Market Mornings, your daily dose of global financial updates. Now, in the markets, we had RBI surprising us yesterday evening with a circular on liberalization of inflows. And we thought, why not we surprise you as well? So, today it's me and Shikhar, your hosts, who will be taking you through the updates. Shikhar, we saw a surprise by RBI yesterday. A circular was released on various steps taken to attract inflows, relaxation in criteria for FPIs to invest in the bond markets, and even some relaxation in the ECB regulations. How do you think this would impact the rupee? And are these very impactful measures?
Okay. Hello and good morning. Thank you, Swaraj. And I do agree. RBI has made a habit of giving surprise entries. So quite an interesting day yesterday. Both the major central banks were reflecting on the markets. RBI announced a slew of policy measures. They tried to boost the foreign fund flows, which have been absent for a while, and they did it by waiving the SLR and CRR regulations on FCNR and NRE deposits from 1st of July till 4th of November. Now, this permits the banks to quote higher rates of interest on FCNR and NRE deposits, although it still is regulated by the RBI. It also included the G6 of 7 years and 14-year maturities in the fully accessible route of investments for FIIs. It removed 30% cap for the FII investments in government and corporate paper till 31st of October, also removing the minimum residual period condition of 1 year for the FII fresh investments in securities. Now, all of this, as I mentioned, they've tried to attract a lot of foreign funds, but has these limits been utilized? Now, that's a still question. So, will it attract the kind of funds they are expecting? Is still a question. Though the announcement has come at a critical juncture wherein USD INR has been pushing at T80 levels, but at the same time, oil, which has been a key commodity, has dropped below the important levels of 100 and is back up though. But it's still unsure whether the pair will go till 80 with these kind of scenarios where the central banks are constantly intervening in various forms in fashions. Commodity which has been raising inflation has been dropping. Now, impact, as we have mentioned, the measure intends to enhance the inflows, which is positive for rupee, but we have to see how the consumption for these basically rules and regulations have been in the financial markets, which currently are poor. Coming on to the global perspective, yesterday minutes of Fed meeting were released, which was held on 15th of June. And the minutes sounded quite hawkish, with members preferring to act on the deteriorating inflation and would consider either a 50 basis or 75 basis tightening in July. Now, the minutes noted that the participants judged there is a significant risk of higher inflation and could be entrenched into the public's question of Feds to resolve this inflation. Now, they continue to see this kind of risk, and despite the hawkish tone of minutes, forex markets stayed a little bit stable and moved after the move of significant directional USD strength in the past 2 days. The stocks were steady, yields corrected a little, retraced a little from the big falls on Tuesday. So the underlying trend, despite remains for dollar strength, we may see some stalling of this trend ahead of the important economic data releases on the fronts of non-farm payroll and the monthly CPI data next week. So we need a good jobs number, a very big push lower in inflation, and probably better economic indications from other global economies as well to stall the kind of dollar trend that we are seeing. Now, the growing fears with the central bank will have to push ahead with tightening even as the economy slows are triggering widespread expectations of recession. In financial markets, these fears are being played out in flat or inverted yield curves, and now also in the commodities as demand destruction is seen outweighing the early years of supply shock. Just one more bit on the global front, we see UK Prime Minister Boris Johnson's political position continued to be on the rocks as several lower ranking ministers resigned and We've seen two shattering defections last night. However, pound has still not been as violent in its reaction as it should have been. So since the already oversold and under-owned currency, a period of consolidation may be in store. So let's see how these markets are preparing, because it is said that the new Tory government and the Chancellor will fast track the fiscal easing by probably tax cuts to soften the hit of the economy shrinking. That has been more on the global front, but interesting times ahead for us in the financial markets. Let's see how all the things or all the factors come at play. That's it for today, and we'll catch up again tomorrow. Thank you, Swaraj.
Thank you, Shikhar. That was very interesting, and of course, a new format for us. The last point you mentioned on the UK government, something very interesting which is happening over there, somewhat reminds me of what happened in Maharashtra with a lot of party members of Shiv Sena leaving our ex-chief minister, Mr. Uddhav Thackeray. So, as Shikhar mentioned, RBI circular came in at a very critical juncture. RBI seems to be getting very active with respect to other forms of intervention. Also on the global front, we have got the non-farm payroll data, which is coming in this week. So these are important updates which can influence the market, and we never know what kind of surprise we might be into, and these cause a lot of volatility. As we saw in yesterday's session for USD INR after the closing. So it's important to have a very prudent risk management practice in place. If you're looking for someone to frame the same, you can contact us here at Almus Risk Consulting. That's it from our end. We'll see you all tomorrow. Thank you.